Welcome to the Tons of Industry Show. We have an amazing show for you today. This is one of my favorite people to interview because you get zero fluff and all content. Vays is a former Wall Street guy. He's now a cryptocurrency commentator, an investor, a trader. Tone, always a pleasure to chat with you. How are you?
Hey man, thanks for having me on. Looking forward to this.
Well, first of all, I want to ask you, are cryptocurrencies in a bear market? Are there more sellers than buyers right now?
Yeah, no, absolutely. I've been calling this a bear market for months. I realized this was a bear market probably sometime in mid to late January, and there was only one point in time where I felt that we might be out of the bear market, and that was early February when the price crashed from 12,000 to 6,000 in a matter of days and had a very swift rebound. I thought that had potential to take us back to all-time highs. I never declared the bottom being in at that time, and I continue to expect lower prices until the charts tell me otherwise as a technical analyst, and altcoins are looking even worse. But that's the more of a long-term picture. If you're looking at a short-term picture, like over a few weeks time horizon, and then we're in the middle of a dead cat bounce that can take us as high as 7,500, but I have a feeling we're about to head back down any day.
Is technical analysis accurate thus far with cryptocurrencies? More than with stocks, less than with stocks? Could you talk about a little bit about obviously the ratio of success with technical analysis in stocks goes anywhere from 30% to some of these more rare patterns that have a 85% probability of succeeding. So could you talk about that in relation to cryptocurrencies?
Sure. So when we talk about cryptocurrencies in general, there could be a million answers because there's only a few cryptocurrencies that are really, really liquid enough where technical analysis is really useful. But the ratio is about the same. We have lots and lots of stocks in the world, right? So we have, the Russell has like 2,000 stocks, right? There's the Wilshire 5,000. And even the Wilshire 5000 doesn't even cover all of the penny stocks that you have. So we are talking about, like 10,000 stocks to choose from. In cryptocurrencies, that pool is a lot smaller. And I consider only top 20 market cap cryptocurrencies that you should even attempt to use technical analysis on. Everything else is equivalent to penny stocks, and it's all about pump and dumps. It's about what insider information you have. It's about, what what private groups you have, where a single guy with $1 million can move the price substantially for some people to profit and for some people to lose. So if we remove all that, we are talking about the top 10, top 20 market cap cryptos. And since I consider everything other than Bitcoin to be, useless in long term, to pretty much be a website without a developer, at the end, we are going to come down to just Bitcoin. If I had to say, is technical analysis on Bitcoin any different than technical analysis on the overall stock market or gold or a currency, again, a liquid currency pair or any high market cap stock, it's not that different. I equate a lot of technical analysis skill sets to gambling, but two particular types of gambling, poker and blackjack. Now, poker obviously requires a lot more skill and a lot more patience. Blackjack doesn't require any patience. Blackjack simply requires the understanding of probabilities, and that's what technical analysis is. So when we talk about the difference of technical analysis in comparison to gambling, it's almost like you have a slight rule change. Like some dealers stay on a soft 17, some hit on a soft 17. That alters the odds a little bit. That's kind of how I see technical analysis. Overall, it's very useful and very slightly different than in traditional markets, but 99% similar.
Now, I want to ask you, Tone, has the market completely changed? I mean, when I was getting into cryptocurrencies for the first time in 2013, I had a feeling like this could be insane, but there's ultra risk involved. I felt that if others catch the potential, then I will do well. and obviously 2017 saw that potential coming true. It was incredible for our subscribers. Obviously, we were one of the first newsletters to alert on Ethereum at $12 per coin, Bitcoin at around $400 per coin, Monero at $19, Steam at about 25 cents per coin, Litecoin at about $20, and Ripple, for example, at 27 cents. But now it seems completely different. It's not about waiting for others to wake up and bid up price, but for regulators to come through, or for meaningful advancements, fundamental advancements, to occur technology-wise with Bitcoin and obviously with other meaningful projects. What's your take on the catalyst to make this sector head higher and unlock the growth potential?
Sure. Well, once again, there are two things to any bear market or bubble top. If we look at the dot-com bubble, the prices fell 72% from peak in early 2000 to the ultimate low, I believe in sometime around 2003. It took a total of about 15 years for the NASDAQ to break the all-time high. Now, the amount of people using the internet did not go through a bubble. The amount of people using the internet only rose. Yet the stock prices of the cumulative stocks using that internet and speculation on top of stocks using that internet had to wait 15 years to get back to a new all-time high. So while Bitcoin price might be in a bubble, the adoption of Bitcoin and the underlying technology is only getting better and only getting stronger and is only getting more useful. It's getting more privacy features. It's starting to be more scalable, and people are starting to trust it more, just like with the internet. While the internet market was still going down, people were starting to use bill pay, for example. People were now looking at their bank accounts on the internet. I know I was in early 2002, early 2003. That's when I started looking at my bank account on the internet for the first time, because I've now trusted the internet with my banking information, all while the price bubble was still going on. So you really have to separate the underlying technology and whether that's in a bubble or whether it's just overhyped prices. Now, when it comes to all of these ICOs and all of these altcoins and all of these proof of stake coins, I think they are both in a technology bubble and a price bubble, and both of them are going to collapse. Bitcoin is simply in a price bubble that is still correcting. And when you are in one of these price bubbles, it's not about the news. The news will never reverse the price of Bitcoin, no matter how good the news is, whether it's ETF news or whatever. At this point, the market will bottom when the majority of the people hate Bitcoin as far as a price perspective goes, then like Bitcoin. So either we need to flatten out for an unreasonably long period of time, and the higher we flatten out, the longer that period of time needs to be. For example, right now the price of Bitcoin is $7,000. We've been stuck in this $6,000 to $7,000 area for months. If we continue in this area into the middle of next year, that should be enough to frustrate enough people so that the weak hands exit and the market can start going up, while a lot of people don't believe that it is. The stock market has been going up since 2009. The stock market has been going up for 10 years, and every year I hear more and more people skeptical of the stock market. And as long as people are skeptical of the stock market, it will continue to go up. And it started to go up when people thought it was going to zero. That's how markets typically bounce. So one way is for everybody to get bored at the current price of Bitcoin. Another way is for Bitcoin to have one of these catastrophic crashes where people actually get hurt in the price of Bitcoin, and then all the weak hands would be out, and then people will recognize that the underlying technology is only getting stronger and stronger and stronger. So it'll just take time. People think the only thing that matters in trading and analyzing markets is price. That is a very bad way to look at markets, and that's what makes really bad traders. There's two elements to trading and investing. There's price and there's time. If you're a long-term investor, you also need to understand time that fits your investing strategy. It needs to be long-term. For example, I travel the world all the time. I'm about to set off on a 4-month travel speaking schedule, teaching workshops, and I do videos every day. I do interviews every day. I don't have time to day trade. My time horizon on Bitcoin is a decade. So I am holding my Bitcoin and I am willing to sit through these 70% corrections, and I don't care because my time horizon is different. If I was an active trader right now and no one knew who I was and I was just sitting at home trading, my time horizon would be a lot shorter, and there's no way I would be holding any Bitcoin right now. And I would probably either be in cash or even shorting it to short-term profit. So your time horizon makes a huge difference in the type of investor or trader you are. And if you don't understand the difference between an investor, a position trader, a swing trader, or a short-term day trader, you really need to go back or just go to Wikipedia and Google these definitions. Because if you don't know what type of a trader you are, you will not succeed.
Now, I want to ask you, do you see a low or a high correlation between the performance of any asset class right now in the world and Bitcoin? For example, the performance of the Nasdaq, the dollar, or anything else. Has anything been proven to have a high correlation with Bitcoin? Because obviously, we all know that most of them right now have a low correlation with Bitcoin. Is there anything that's popping to be more reliable in correlation?
That is a very good question. So again, there's no simple answer, so I'm going to answer it from multiple perspectives. I believe that Bitcoin is a brand new asset class. Notice I didn't say crypto. I specifically said Bitcoin because I think when it's all said and done, a decade from now, people will realize that it has always been Bitcoin. No such thing as blockchain. It's just Bitcoin. It's the only thing that matters. That is the innovation. I believe it is an uncorrelated asset to anything you currently have in your portfolio. And it's an amazing diversification tool for your efficient market portfolio if anyone is, a true economist looking at it from that angle. Now, having said that, Bitcoin is a private asset. It's actually the most private asset the world has ever seen because Bitcoin, if you're properly storing it and protecting it, is unconfiscatable, which is something no other asset can offer you, not even gold. Gold is very confiscatable. We saw it in the 30s, and we now see it today with metal detectors. If the government shows up at your house and they find that safe of yours, they're going to confiscate that gold. If you have it buried in your backyard, they can bring in a guy with a metal detector and they will find that gold bar. So gold is very confiscatable, but Bitcoin you can store in your head and no one even knows you have it. And then you can, get back to it whenever you like. So it gives it that as an uncorrelated asset. Now, because it's a private asset, it has a slight correlation on a large perspective with other private assets. What are other private assets? These are assets like gold. These are assets like real estate, even though real estate does have a public component, because if you don't pay your taxes, the government gets to take away your property. Stocks are generally private assets, even though they're public companies regulated by the government. So government has some say, but a stock is pretty much a private asset. Same thing if you own a business or you're an investor in small businesses or you're a VC. That's an example of an investment in a private asset. What is an example of a public asset? A public asset are things like government bonds. Government bonds are public assets. So there's this dynamic when people don't trust the private sector or they feel that the private sector is, doing things that are a little bit malicious or they're being swindled by the socialists and the communists, that private sector is bad. People dump the private sector and they put the money into the public sector. We saw this during the 2008 financial crisis when the stock market crashed. And guess what happened? Gold crashed as well. Everyone that was always, all of the gold bugs that were praying that, oh, if only a market crash comes, us and all of our gold in our, hidden in the backyard, we will all become rich. But when the stock market fell 50%, gold fell 33%. What these people didn't realize is that when private assets crash, people lose their jobs. When people lose their jobs, they have no money. When people have no money, the last thing they're going to do is buy gold. But if they have any gold, they're going to sell that gold to support their families and put food on the table. So all private assets crashed. Which assets went up in price? The public assets did. The government bonds did, because the government was bailed out everybody, and people had a little more confidence. Now, you can say that it was artificial, but if you were holding government bonds and the bond yields crashed, whether it was artificially or natural doesn't really matter, right? If you were holding a government bond portfolio, the price of that portfolio went through the roof because the interest rate on government bonds went down to zero, and the bonds that you held that were paying a higher interest rate, all of a sudden the par value of that bond became very, very profitable. So Bitcoin does have a slight correlation in that it's a private asset. And when the private sector takes a hit, the public sector goes up in value. When the public sector takes a hit, the private assets go up in value. When Trump gets into office and he's very pro-business and pro-public sector and anti-public sector, the stock market goes through the roof. And that's what I was saying. I could not understand why the stock market would crash every time Trump would lead in the polls against Hillary, and the stock market would rise when Hillary was rising in the polls. I thought that was the dumbest thing in the world, and total stupidity coming from the mass media, because Trump was going to be excellent for the stock market with lower taxes and being pro-public sector. Hillary or Bernie Sanders were going to be a disaster for the private sector with their tax policies. So that's what happens. So because Bitcoin is a private asset, not a public asset, it has a slight correlation to all private assets. Now, on a short-term perspective, and I'll make this quick, because of the digital nature of Bitcoin, and I believe as time goes on, technology allows faster and more efficient processing of information. I see huge correlations between the way Bitcoin is going through its bear market and the way precious metals have gone through their bear market of 2011. But Bitcoin is doing it significantly faster. And what is taking gold to get back to all-time highs and exceed those all-time highs, where gold has now been in an 8-year bear market, and will probably take another 8 years to get back to its new all-time high, and then quickly rise from 2000 maybe to 5 or 8. What's going to take gold 20 years to achieve, Bitcoin has achieved that in under 4 years. And it will probably achieve it again in the next 4 to 5 years. So while it has a very similar style and pattern, it's just doing it a lot faster. So if you put silver or gold on, let's say, a weekly scale, and you compare that to Bitcoin on a daily scale, they will mimic each other. So that's not exact correlation, but if you know time series analysis and you can adjust your time factor, you can certainly show correlation between gold, silver, and Bitcoin.
Understood. Now, Tone, give us the latest on regulations and progress of all things ETFs. Can you talk about just give us a good update for everyone?
Sure. So I can make the argument that we should not have Bitcoin ETFs. Now, again, I'm saying Bitcoin. I think any other crypto besides Bitcoin should not exist, and it will only end in a complete disaster. I don't believe they're sustainable. I don't believe they're technologically sustainable. I don't believe they're economically sustainable. And I don't believe they're conceptually needed. Your smart contracts do not need to be decentralized. Only the payment method needs to be decentralized. They are grossly inefficient. So having said that, let's talk about the Bitcoin ETF. So here is my argument against the Bitcoin ETF, and the SEC is using a part of that argument. Now, the conceptual now there's two types of ETFs that the government can allow. The one that's similar to GLD, which is the gold ETF, would be a fully backed ETF. So the SEC has two problems with it, and I agree with them. One of them is they don't have control of regulation of the underlying exchanges of Bitcoin. That means that the price discovery of Bitcoin is not under the regulation of the SEC. Now, we can debate all day long whether the SEC's oversight is good or bad for the world. That's a very debatable argument. I can also debate both sides of that. But it is what it is. The SEC has oversight of the underlying price discovery, and in Bitcoin, they don't. So the reason why the Bitcoin ETF continues to be rejected is because the SEC feels they do not have sufficient enough oversight of the underlying exchanges, aka price discovery. As long as that is the case, they will not approve the ETF. So that's as far as I'm concerned. That's one reason. The other problem with a Bitcoin ETF that is going to be fully backed by Bitcoin, the way GLD is fully backed by gold, someone has to be responsible for the storage and security of that Bitcoin underlying the Bitcoin ETF. Just like a company is responsible for the security of the gold underlying the gold ETF. Now, the securing a vault full of gold is infinitely easier than securing Bitcoin. Securing Bitcoin is one of the hardest things in the world. It's up there with securing nuclear energy and nuclear waste, okay? Because you can be hacked internally or externally, or you can just do something stupid and lose your private key, and all of that Bitcoin is now gone. So that's another problem that the SEC has not even fully addressed, but they're going to need to. They're going to make sure that they trust whichever company or companies are responsible for the security of that Bitcoin. Because if the Bitcoin underlying the ETF gets hacked, you got a monster problem on your hands with the SEC as the overseer to make sure this can't happen. So those are the two huge problems. Now, as a Bitcoin I guess, maximalist, as people like to call me, I believe that Bitcoin could one day be the world's most useful value transfer currency. But it's hard for me to make that argument if half of all the Bitcoins in the world are sitting behind an ETF, backing an ETF, because that puts a giant sum of Bitcoin under the control of the government, where they can come in and confiscate it the way the government confiscated gold in the 1930s, and that can completely undermine the stability of the Bitcoin as a currency if all of a sudden half of that store of value, which would be substantial, in 10 to 15 years, is all of a sudden at risk of government confiscation or at risk of a hack. So that is one of the reasons why I don't want to see a Bitcoin-backed ETF. Now, here's my small argument as to why we should have a Bitcoin ETF, because the SEC royally screwed up with Barry Silbert's GBTC. That is I don't know. Sorry, I'm like a little tired. I'm trying to remember what GBTC stands for, but it's basically a trust. So it's like a private trust where people buy into Bitcoin and they have to hold it for a year. But once the year is up, they're allowed to liquidate their Bitcoin position. But they don't just liquidate that position privately. GBTC is publicly traded as a penny stock, and I can own it in my retirement fund. And it's technically backed by Bitcoin. And it was so poorly designed that it currently trades on the stock market and fluctuates between 20% above the underlying value of Bitcoin and 150 to 200% above the underlying value of Bitcoin. It is the most inefficient quasi-ETF I have ever seen in my life. And I think it is so bad. But it's the only option for a person trading traditional markets in their retirement funds. Like if I want to own Bitcoin in my retirement fund for tax advantages, I have no choice but to buy GBTC. And I think it's such a bad product. And it has a monopoly. And not only does it have a monopoly in the traditional finance world, it's the most inefficient product you can make. Like if you wanted to make an inefficient product, you probably wouldn't make it as inefficient as that product. And therefore, it absolutely needs some competition. So because of the SEC screw up in allowing GBTC to be publicly traded, I believe that they need to launch a more efficient ETF sooner or later to correct their earlier mistake.
Can you compare the blockchain protocol with the World Wide Web protocol? I want to kind of have a discussion regarding how much value is in the World Wide Web, which has about $5 trillion worth of transactions going through it daily, but no one monetizes that value, and the blockchain, and or the Bitcoin blockchain that you are a big fan of. So, can you talk about technology and how this is from a more higher perspective of a technological view?
It's very interesting that you said no one is monetizing that value, because I have to disagree with that statement. Netflix perfectly monetized that value and eliminated Blockbuster. All Netflix is Blockbuster on the internet. The only reason Netflix exists is because they have monetized the use of the internet.
Sure, I don't mean there are no companies leveraging the power of the internet.
No, I understand that, but this is where I'm making the comparison. So Netflix utilized the Bitcoin in order to fully monetize. Netflix utilized the internet in order to monetize the internet and build a giant company. Amazon did the same thing. Amazon is just mail order catalogs from the 1800s, utilizing the latest technology of the internet. And they have put their catalog on the internet, and they now sell everything under the sun, and is one of the biggest companies we have today. So what you have is the underlying protocol, which is the internet. And the internet was a way to decentralize information and in order to facilitate, and those that were able to facilitate better commerce on the internet did amazingly well. And these are our companies like eBay, like Facebook and Google with ad revenue as their business model. And of course, sharing our private data. That's part of their business model. And we allow them to do that because we want free services like Gmail. So Bitcoin is on that level. Bitcoin has decentralized money the way the internet decentralized communication. Now, we can say that internet isn't perfect. It's not really decentralizing communication because the government still has a lot of control over the internet. So maybe the internet wasn't built perfectly. In a perfect world, the government would not have any control of the internet, and then our information would be fully decentralized. Perhaps Bitcoin will do a slightly better job. The developers of Bitcoin will do a slightly better job in decentralizing money in a way that government will have absolutely no control of money from an economic perspective as far as how much money is in the economy, from the censorship perspective as far as who can send how much money to who. So I'm hoping that the internet's mistakes of privacy and decentralization will be fully corrected, and for now they're mostly corrected in Bitcoin. So now it comes down to which companies are going to utilize Bitcoin to its full advantage to build the next Netflix and the next Amazon. Well, we're already seeing Bitcoin mining companies revolutionizing chips and the way computer chips are being made to process more information in the fastest amount of time, generating the least amount of heat. So there's innovation there. We are seeing the Bitcoin blockchain create massive innovation in thermodynamics and energy consumption, because in order to run your mining farm to mine that Bitcoin, you have to have amazing electricity efficiencies in order to compete. You also need, if you're going to have amazing electricity, cheap electricity, somewhere in the middle of the desert or somewhere in the middle of a rainforest, you better come up with some innovating thermodynamics in order to cool that mining farm. So we are seeing insane innovation, and those that can capitalize on that innovation will be monster companies to be reckoning with. Perhaps some of the crypto exchanges will have enough capital to revolutionize the way we route transactions and create more efficient markets. Right now, I'm seeing the opposite. Right now, I'm seeing gross incompetence from these crypto exchanges as far as creating better efficient markets that help the world, but perhaps that can turn around and create efficiencies. Let's even take a company like Netflix. I don't see how Netflix can possibly function in regions like Africa, which is one of the biggest regions in the world because of rampant credit card fraud. But all Netflix has to do is integrate the latest Bitcoin payment methods And now you can fully eliminate credit card fraud in payments for your streaming and watching videos. So if Netflix doesn't get on the bandwagon eventually of accepting Bitcoin as a payment, another video streaming company can come up with just as cool technology as Netflix, going after an entire new region, thanks to censorship resistance and payments. And all of a sudden, Netflix finds itself in the position of Blockbuster because they didn't utilize the latest in blockchain technology, even simply from a payment perspective. So that is how that is the proper way of utilizing the Bitcoin blockchain, because it's the only one that so far has been proven to be immutable. If you're building your business on top of a blockchain that has not proven itself, it's almost like building your Amazon on a competing internet in 2003, and that internet completely imploded, and there goes your company. So you really got to pick the proper underlying protocol in order to build the future of your business on. So I hope that helps explain how I view the situation of a blockchain.
Tone, can the name cryptocurrencies, is it a bad name at this point, misrepresenting, is what I'm asking?
I wouldn't say it's misrepresenting, but people are, treating Bitcoin and Bitcoin's inferior competitors as almost the same, but they're not the same. Bitcoin is competing with gold. It's competing with the US dollar. It's competing with the euro. Bitcoin is competing with, multi-trillion dollar elements of the world economy. All of these copycats are competing with each other, and 99% of the time is simply one guy that has absolutely no usefulness to the Bitcoin ecosystem and probably the general ecosystem, trying to make himself rich. So Bitcoin is just not on that level. You can call them all cryptocurrencies if you like, and I don't even like that name in general. Cryptocurrency simply means encryption. I'm pretty sure the US dollar has encryption in it as the Fed prints it. Otherwise, anybody can print it. So to be honest, I don't like the term cryptocurrency in general, but it is what it is. The one thing that makes Bitcoin different than anything else is the fact that it's decentralized. And what makes it decentralized is proof of work that Satoshi introduced to the world in 2008 in his white paper and in 2009 with the Genesis block. And between proof of work and the concept of proof of work and decentralization, Bitcoin stands alone in the crypto space, and slowly everything else will go away or will be rendered as intranets versus the internet. When I worked at Bear Stearns, when I worked at JP Morgan, we had internal intranets. They were very, very useful. They can even get on the internet, but they were centralized and they were monitored and they were, tailored to the business itself. So all of these other, altcoins, cryptocurrencies besides Bitcoin, they're no different than intranets. We have one internet protocol today, and we will most likely have one public blockchain. Does it have to be Bitcoin? No. Do I believe it will be Bitcoin? Yes, because all of the brain power is programming on Bitcoin. The amount of natural resources your country has is almost irrelevant. Your country is the total brain capacity of its hardworking people in that country. That's how Japan had the second largest economy in the world in the 1980s with almost no natural resources. And Russia has never been able to make it into the top three with every single natural resource under the sun that you can mine in that country. It's all about which people are, driving your innovation.
Now, I see many, hundreds, even thousands of investors, probably more, who have only invested in cryptocurrencies and have never invested in stocks, never invested in bonds, never invested in real estate. Is that something that you have observed as well?
Oh, absolutely. In fact, I pretty much made a business out of it. When I came into the crypto space, I wanted to do something that was useful, that was relevant, and that would benefit people, but I'm not a developer. I studied financial engineering. I worked on Wall Street. I wasn't a very good developer. I worked with developers. I worked with quant teams on building risk models, but I wasn't a very good developer and I didn't like it. So if you're not a developer and you don't have a desire, to be a CEO of a business, of a large business, and I've been a small business owner before, and running a business is not really like a business with a bunch of employees where you have to sit in an office. Wasn't something I was great at either. And I tried investing some of my money. Well, I had money. I had a very good Wall Street salary. I did okay in the early Bitcoin days, so I had some money. I decided to invest in some companies, and I learned that I wasn't good at that either. But at the same time, what I did build a business out of is my experience of being a trader. With 15 years of trading experience behind me, when I came into the crypto space, I noticed the same thing you have. I saw that, hey, all of these people are trading and they know nothing about traditional trading. They've never actually done it outside of crypto. So I started out writing articles, and it was an educational series about technical analysis and trading. That led to me being a guest on YouTube channels, again, talking trading. And now I travel the world as I speak at these conferences about Bitcoin and blockchain, which is my number one priority. I don't get paid to do that. I don't get paid to evangelize Bitcoin. But what I do is I leverage my skill set as an educator, because I used to be a high school teacher and a college professor before I got to Wall Street. And I use that skill set to teach full day workshops. And they honestly should be 3-day workshops, but I only have, so much time, where I educate people how to be traders. And even today, when I poll my classroom of like 15 to 20 people, how many of you have trading experience other than Bitcoin? Only less than half the class raises their hand. And therefore, people that only come in starting with trading Bitcoin, it will be a miracle if you succeed, because it's so difficult. Trading is so hard. And this is why I try to educate people. And I noticed this, and now my trading workshops are very popular around the world as people learn how to trade any asset. And all of the experience that I have from traditional trading, I have put it into crypto. And the craziest thing that I hear is people telling me how this is different than traditional trading. And it's not. And these are the people that have no experience in traditional trading. It's even funnier when they say this to people with over 40 years trading experience. Tyler Jenks of Lucid Investments has 40 years of successful money management. Managed insanely large retirement portfolios and accounts. I even leverage his 40 years of trading experience to become a better trader. And people make fun of him, saying that he has no idea what he's talking about because the Bitcoin space is different. And that is just like laughable.
Now, out of the many, over 1,800 crypto projects out there, you really think that the probable failure rate is 100%? Can you please explain, back up what you're talking about? Because that concept is radical, I must say, and it's important for people to understand why you believe that only Bitcoin is essential in the end, because obviously lots of crypto projects or these assets, tokens, are very specific, are very niched. They tackle very unique industries and sectors, and they're basically like little startup companies. So it's important for people to understand your concept and what is behind it.
Sure. Oh, wow. I'm going to attempt to keep this short, but that would be very difficult. You said it yourself. These are little startup companies. Let's underline the word companies. They are companies. And all of these ICOs that all of these companies are issuing, they're nothing but unlicensed, unregistered, uncompliant securities. There is no innovation there. ICOing is not an innovation. ICOing is siphoning money from unqualified investors in a very scammy and probably illegal way. Okay? So any ICO is pretty much going to revert back to being a traditional stock, assuming this company survives. So that has absolutely nothing to do with crypto. That has absolutely nothing to do with decentralization. So every single ICO, they're done. There's no innovation in the fact that you're an ICO. Now, you can innovate. Your company might come up with something creative, but your actual token that you're treating as a quasi-security, quasi-currency, quasi-utility token, that is the scammy part of your operation. Your idea may or may not be legit. That is debatable. I have seen, maybe a dozen out of 1,000 ideas that I would find, useful and potentially useful into the future. But this is also why I'm not a very good VC, and I let the chips fall as they may. I'm not here I could be here to critique your idea, but I'm talking specifically about the mechanism in how you funded that idea. If you funded your idea with an ICO, then you're probably breaking every security law that has existed in the last 100 years. And eventually the SEC will wake up, and they'll probably wake up too late, and then we'll have another bubble, and then everybody will blame the SEC, saying, why didn't they do something? Meanwhile, right now, everyone is saying, no, don't blame the SEC not to get involved. Again, I was working at Bear Stearns. I was there when the housing market fell, when it crashed. All Wall Street did was help you buy a house on the cheap. And then when the crash came, everybody blamed Wall Street. Nobody blamed themselves for buying $1 million house that was worth $200,000. Everybody blamed Wall Street, okay? So you really got to think about what's going on there. Now we can talk about these protocols that are supporting these ICOs. These are your Ethereums. These are your EOS. These are your they're also ICOs, so they're also breaking the same security laws, in my opinion, as the ICOs built on top of them. But besides the regulatory problem that they now have, even these protocols are still centralized, hence the regulatory problem that they have. Blockchains and decentralization is one of the most inefficient, useless, terrible technological tools you can use for any business. The only time it actually makes sense is when it's absolutely necessary to prevent censorship. And because we have infinite amount of censorship in our money, the way it's created, the way we're allowed to use it, decentralization and a blockchain is absolutely necessary in order for the world to have unconfiscatable, censorship-resistant, hard money that the government cannot print on a whim. That is why a blockchain for Bitcoin makes sense. Now, a couple of Bitcoin copycats and straight-up currency competitors can claim that they can be better than Bitcoin. But now they have to prove that they are A, more secure, which they're not, B, more decentralized, which they're not, from every perspective, from node counts that process transactions, from global mining competition, from the amount of coins a small percentage of the people have and the distribution of those coins, and the wide acceptance of those coins for goods and services. So all of Bitcoin's currency copycats just can't compete until, and I don't believe that they will compete, but that is the only possibility that they have. And all of these ICOs, they're just companies. And there's no innovation there at all. Just because you created an ICO on top of Ethereum, with Ethereum being just like, there's a point where Ethereum will no longer function. And this is easily provable. You can create a Bitcoin node and process your own Bitcoin transactions and have a storage of every Bitcoin transaction that has ever happened in Bitcoin's history. And you can get this set up in a matter of weeks. With a very good internet connection and a very good fast computer, you can probably get it done in under a week. This is almost impossible in Ethereum. You have to flip it. You would need like some of the best internet in the world and one of the most expensive computers in the world. We're talking $3,000 plus for a fast processing computer, plus some of the best fiber internet in the world to even have a chance at downloading the entire Ethereum blockchain and then run a node processing Ethereum transactions. This is how Ethereum becomes a complete centralized mess that is ripe for disruption from a more efficient centralized company. And Bitcoin doesn't have that kind of competition. So I believe that all of these ICOs, they are actually ripe for disruption by a more useful, more efficient, centralized alternative. And that's why at the end, when the dust settles, maybe in 5 years, maybe in 10, maybe in 20, people will realize that there is only room for one decentralized blockchain, and my money is on Bitcoin.
Tone, where can people follow your work?
Sure. So pretty much on my YouTube channel, that's where I put out the most amount of content. I do an unreasonable amount of video content. You can just find me at my Tone Vays YouTube channel. I do not have a company. I just have my name. So the Tone Vays YouTube channel. I'm also very active on Twitter as Tone Vays. You can look for Tone Vays everywhere, LinkedIn, Instagram, though I'm not active there. Facebook, I'm not active there. One of these days, I'll hire a social media coordinator to help me out with all that. But please be careful of scammers. Telegram and fake LinkedIns and fake, there's fake everything. So please don't assume you're talking to the real Tone Vays. Always make sure you look at the number of followers, double, triple check. Bitcoin is such an amazing tool that if you think you're talking to a fake me and you pay a fake me for something in Bitcoin, there's absolutely no recourse. There's nothing I can do. There's nothing anybody can do to get you that Bitcoin back. So please be careful of scammers.
Tone, thanks a lot for taking the time to doing this interview, and we'll definitely have you on again, man.
Thank you. Oh, and tonevays.com, of course. Forgot to mention my website.
No problem. ToneVays.com. It will be on the screen as well. Tone, thank you very much for sharing everything with us.
No, thank you, Larry.